Good evening. This side Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. As we speak, Treasury Consulting is a multinational headquartered group based out Singapore. We are a multinational hedge fund who have interest in US equities, European equities, and Asian equities, apart from currencies and commodities. But like I said, we are a proprietary hedge fund, which means no third party. I repeat, no third party can invest capital in our funds. Today, our fund launched dedicated US equity desk, which means now we would be taking more positions in US equities, which includes Dow Jones, Nasdaq, and Standard & Poor. But once again, it would be a closed desk, which means no third party can invest in this equity desk. Today, 17th May 2022. Two important things happened in Indian financial market, strictly speaking. Number one is definitely the Life Insurance Corporation. The day Life Insurance Corporation IPO is in public, I am also in public. And from the very first day, I am repeating my same line that Life Insurance Corporation is overvalued company. Of course, I completely agree that LIC, as we speak, I repeat, as we speak, is number one insurance player in India. It is completely owned by Government of India. More importantly, it is a profitable company. But we also need to see the other side of the coin, which is in early 2000, Life Insurance Corporation market share was approximately 80%, which has now reduced very near to 60%. While the competitors HDFC Life, ICICI Prudential, and many other private competitors listed or non-listed are eating the LIC market share. And this eating is happening on the consecutive basis. Now, that's a separate thing that we tend to disregard this. This is something very important. And LIC PAT, which is known as profit after tax or bottom line, if you are thinking that LIC PAT is substantial, then you need to understand that LIC PAT is between 2,500 crores to approximately 2,800 crores. And there are so many companies we have, those who have PAT in this list. So LIC financials do not have something significant that can push the investor to subscribe or hold LIC for a long term. To me, and I'm very straightforward, LIC, Life Insurance Corporation, is like another insurance company. Because the 6 months ago, when Indian media hyped LIC to 14 lakh crore company, and today when LIC listed against the listing price of 949, investors lost 50,000 crores of market cap. So on the very first day of Life Insurance Corporation IPO, investors lost 50,000 crores. I personally would like to invest LIC. My fund would be investing in LIC. But having said that, we will not invest in LIC at least for few more months. We would be waiting for few more months because there are many important factors to come. Number one is definitely the Federal Reserve hike, which I'm expecting in June and July. Although Federal Reserve himself is aware that they are hiking against the market. Against the market means they are aware that the economy as well as the markets might not be able to digest that. And if this happens, so example, if in June and July, Federal Reserve would be hiking by 50 bips each, then it would have a catastrophe. I repeat, it would have a catastrophic impact on the financial markets globally. So no financial market, whether any emerging market or developed market, would be spared. And many economists of the globe, even if you exclude my name, warned Federal Reserve that if they would be hiking the rate by 50 bips in June and July, then a recession is on the cards. And I personally feel that this is not a recession because economists deliberately are misleading the investors. This is not a recession, rather this is a depression. So God forbid if Fed would have raised in June and July, then the United States economy entered into depression. Today there is another news came, although informally, which is that US is looking to raise more debt, which will additionally put pressure on the global economies. In India also, Reserve Bank of India is buying a huge quantity of gold. I already collated this data from the internet, but I'm studying this, doing my research, so I'm not in a position to comment now. Probably few days from now, I would be in a position to comment. But having said that, Reserve Bank of India will also be hiking the rate. Today, State Bank of India economist, SBI economist said that RBI would be hiking by 75 bips in August. Oh my God, 75 bips in August. If RBI hiked by 75 bips in August, then I'm telling you the MSME sector, medium and small enterprise sector, would have collapsed, completely collapsed. More importantly, the corporates who have raised a huge debt, INR denominated working capital loans in their books, they would be facing severe mark-to-market losses. And no company would be spared because accounting is same for all the companies. So I don't know till what extent SBI, State Bank of India economists are correct, because fundamentally speaking, I repeat, fundamentally speaking and technically speaking, I don't think RBI should hike the rate because the ground reality is very, very pathetic, not poor, pathetic. But still, if due to political compulsions, RBI is hiking the rate, then it would have a catastrophic impact on the financial markets of India. So today, as we speak, Nifty is about 16.2 because many people chase Nifty as a number, but I don't chase Nifty as a number. I always chase the intrinsic value of the stock. But anyways, so today Nifty is around 16.2. And God forbid if RBI hiked it by 75 bips, then it would have a big negative, deep and denting impact on both the indices, which is Nifty and Bank Nifty. Well, I see more on Bank Nifty because the banks' balance sheets would collapse. Banks would be passing the hike to the customers. And I doubt customers would be able to digest this. So imagine you have a working capital loan which is at 5%, example, and all of a sudden you're getting a message or from a bank that now it is 5.75%. Majority of the people would be, they would be, I would say, faint at that point of time because they need to pay 75 bips more. And it would have a negative MTM impact on their portfolio. So guys, to conclude the thing, Life Insurance Corporation was once again a big mistake by India. In the sense like, I again repeat, LIC financials need not supporting the listing price of 949. I'm not quoting any figure deliberately, but my figure is way lesser than what it has been approved. Let it be honest. But still, the similar mistake like Paytm is being committed. We have a separate video on the Paytm after this. In Paytm, listing price of 2150 was approved. And you see today the stock is closer to 500. Similarly, the same mistake done in LIC also when 950 rupees of price is approved. Today is Monday, so tomorrow is Tuesday, then we have Wednesday, Thursday, Friday, which means 4 days to go. If LIC share would continue to fall, and God forbid, if LIC came down to 800 or probably by 750, then it would trigger sell-off. I'm telling you, it would trigger sell-off. Because investors already worried about the Paytm news, which we would be covering after 5 minutes on the Facebook. Let's see how it happens. But like I said, investors invest not because of intrinsic value. They do not know intrinsic value. They do not know how to study the intrinsic value. End result, they always lose. Paytm, Zomato, Nike, Policy Bazaar, Car Trade, now LIC, and many on the way. This is Rahul Magan from Treasury Consulting Group. You knew my personal number, 9899242978. I repeat, 9899242978. Have a great time ahead.